victory like Bush did when he flew onto the carrier after the U.S. went into Iraq.
It also hasn't moved down with this dip in yields because of the Bank of England action. So it's not. I think it's stuck in the cross currents at the moment between the dollar and the other majors, and it's that effect on the yen in the crosses. Okay.
And one thing I did notice is that the way Canada came off today, right now, with the Dixie pressing new highs, maybe a failing rally, off this break we had in the loonie. And I know you were focused on commodity currencies and thinking that we're, trader intuition of yours is that we're getting closer to a turn, and the commodity currencies were your interest, because of what's going to overhang Europe, etc. And the government in the UK and central banks. So Canada, pretty far off its high from last night.
I think it's important. I think it's important to know the context right this minute for this. I mean, that dollar CAD was looking like it was going to take a run well above 138, but this Bank of England move hit yields, and it's hit yields everywhere. Dollar, you name it, whatever 10-year yield you want to look at, they've been hit by this Bank of England news, and that's partially put this short-term noise in. So that's one of the reasons why dollar CAD got knocked off the highs. I wouldn't rule out
the similarities, Ryan. It's a great point of bringing up yields. I mean, it almost looks like the same kind of pattern. You had the initial break, and so far it hasn't recovered, just like USDCAD here. So maybe this is going to have some impact on the markets, yield-wise and currency-wise.
Yeah, it's going to be interesting what happens here. Very interesting what happens. The Bank of England stepped in and calmed the market, and cable hit a fresh low today. Under 106. How is the market going to see it? Are they going to leave the BOE hanging on their own? Is it going to raise fears of more coordinated action, or other central banks, government stepping in?
So the BOE intervened. Is that what you're saying? They intervened today? What did they do?
Well, they basically came out and said they're going to control, for the next 2 weeks, they're going to control long end of the yields. I think up to 30.
Can I take the over?
Of course, Steve.
Huh? Can I take the over? Because, these are the 2 weeks that will never be ending, or something like that. You know what I mean? Yeah, it's if you remember, these were my initial comments several days ago, that
they needed to raise rates.
In my opinion, this is a death spiral. They're going to be doing one thing after the next until they finally decide to do what they must do. Everything else is going to have only temporary effects.
Yeah, I feel like I'm living in a parallel universe. Danny Blanchflower, the labor economist, is all of a sudden a central banker again, and hawkish. This is unprecedented.
Yeah, this goes, in my opinion, this goes beyond being hawkish. Now this is a fight for. It's a little bit of an exaggeration, but yeah. But it's a little bit of fight of survival. Yeah.
The sovereign, a lot of people have been talking about this upcoming sovereign debt crisis for a long time. I mean, the speed of the ascent in, when I look at TLT, and, I tried it at 106, okay? And here we are at 100. So, I mean, and the velocity of the way bonds are getting, it looks like a crash, doesn't it? I mean, we had this one little rally here, and bond markets.
Things
everyone's so worried about the stock market. I mean, this is the bond markets are much larger than equities, and of course, FX much bigger than all of them. But can you imagine all the losses that are occurring, market cap of bonds during this?
Yeah, and good morning. And
Hey,
I think
bro.
I'm glad you brought this up. We had a really interesting conversation, and good morning, everybody. We had a very interesting conversation in the chat room, and I want to highlight this because I think having Ryan and K-Man here to help explain. Ryan, you just recently met with Mark, who's one of our traders in our community, correct?
Yeah.
You met him at the golf course or at a pub? I can't remember.
But
gotta be a pub.
Yeah, him and I, we for years we've always talked about about like playing golf, and he may be listening in right now, but it's really interesting because you got all these people on Twitter and all these people that you hear they got YouTube channels, they talk about this and that and the other thing, and he was talking, and people have been saying, oh wait, the reason why they've been heard that the Bank of England has come in and made these actions because here, let me just go ahead. Do you mind if I take the charts?
No, okay, you don't even have to ask me.
Well, why are you doing that?
You're the boss, man.
Well, I know. I just want to say this, that there's people out there saying that, oh, the Bank of England, we're hearing the Bank of England did this action because of the move that you've seen in gilts. And it's affecting pension funds that might go insolvent. Yeah. And Mark jumped in the chat room and he talked about how pension fund accounting works in the UK. And so Ryan, do you want to speak on that? I know you were just going to say something, but on why the Bank of England might have done this, because he called him out and he's like, this is silly that they're saying it.
Yeah, I mean, effectively, some people are saying that bond markets, or rather pension funds, are the wrong side of the bond market, and that's why that's happening. And he's saying that largely they're on the right side, or they will be on the right side of these trades. So
they tend to be net short.
Some might be on the long side, and on the wrong side rather. But nevertheless, largely in the way it works is that they are on the right side of this. But that's not to say that there aren't going to be margin calls and things, hedge funds and all the other stuff.
Yeah.
But I just want to highlight quickly for those who are in the US or coming late to the show, you really want to check out today's Flow show, because we did a big section on what's happening in bond yields, what the actual drivers are compared to what you're hearing in the press and so-called experts and the financial world. We're not in a rout. We're in volatility, but we're not in a rout. But if you've got the chart,
this is a bond route, Ryan, really?
Well, US 10s at 4%, expected interest rates at between 4 and 5%. Where does everyone expect yields to be when US interest rates are said to be between 4 and 5%?
But the acceleration of longer dated paper that a lot of people own besides the Fed,
Blake, if you can put a chart up and put in the code USINTR.
Okay.
That top one there. That's why bond markets are rallying. Look at that steepness in rates over the course of what, 4, 5 months? 5 months? It's unprecedented.
So
and the
bond
velocity.
Yeah.
How long were we speaking about yields couldn't get up over 1.82% in 10 years while the Fed was going full tilt hawkish? The market didn't believe. The market didn't believe rates could go that high, and we're going that high.
Which is kind of weird once inflation got to where it is, because it made sense not to believe it as long as inflation was somewhat tamed. But I mean, in all honesty, what did the markets expect with inflation being at 9%?
Exactly. But the markets had zero rates for 10, 15 years. It's had the central bank backstop. It didn't believe that rates could go there. And it's probably only taken the last couple of months for that realization to finally sink in. And here we are having a catch up. But a rout is when interest rates are expected at between 4 and 5%, and bond yields are trading at 6, 7%. That's when you're talking a rout, when the risk premium is well over where rates are expected.
Right.
Okay.
That's a great point. There's another trader in our chat room was like, just wake me up when the 30-year gets to actually wherever the terminal rate they expect the terminal rate to be, which the 30-year interest yields are right now are yielding 30 years yielding what 3.7%, 3.8, 3.84. So the expected terminal rate right now is going to be at 4.4. So maybe rates still have something to move. Hey, I want to ask K-Man, you're probably here, you're listening in. What do you make of the recent action in the sterling or the Bank of England overnight?
Good morning, everybody.
Morning.
Okay.
Hey, hi Dale. Good early morning, my friend. Well, what I think is, I said it in the chat room no later than yesterday night, right? Saying that for me, the one thing they could do in the really short term was YCC, and that's exactly what they are doing. They are trying to control the yield curve now. And then my next observation or question was, does Bailey speak Japanese? Because Kuroda, he has a bit of experience with YCC and lately interventions. So how long are they going to maintain this is the real question. They say in 2 weeks because they have to still raise interest rates on the next Bank of England meeting, and they're keeping their plans for QT once they are done with this YCC. They are keeping their plans for QT intact. They just postponed it to November, I think. So yeah, I think the reaction of the market was pretty logic. So the yields came off, especially in the UK, but a bit everywhere. That put a bit under risk, which is also a normal reaction, because when the yields come off, it's it's less stress on in the bond market, so risk is picking up again. But then we saw the real reaction, which was cable rallied like 150 points in sympathy, and then got absolutely mullered because the market knows exactly what YCC means, and and especially when you have the other side of the medal, which is a rampaging dollar. So and that's when cable dropped 300 points from that spike. So I think.
Can you explain to people why yield curve control weakened the sterling?
Yeah, you just have to look at what happens in the yen. When one currency caps its yields, and the rest of the market, the rest of the central banks are raising rates, that is what you get as a reaction. Just look at Japan. Japan is the poster child for what's happening when you do YCC.
Right. So let me ask you this. So moving forward, what do you do with the sterling then?
I think it's still for as long as they do not really intervene. And I think really, I mean, I've been short sterling, right? And I think really, but I'm getting cautious right now, because I think the amplitude of the cable moves is a little unhealthy, perhaps, and also reminding what Kuroda was saying about 200-300 pips being excessive. We've done about 700 in the cable in how much a week?
A week, yeah, and we were below that. Well,
so there is a risk. There is a risk, in my opinion, that they are going to be forced, not that they want, but are going to be forced to stop the sterling rot at some stage. But then, is it going to be have a long-term effect? Well, we already know the answer. Bank of Japan warned from 143, intervened above 145, and we are trading 30 pips below 145, as if nothing happened. They only, as Ryan said, killed the vol. So that may be one thing that Bank of England is now looking at, is to try and kill the vol in the cable as well.
Yeah, and I guess one of the things, and thank you, K-Man, for your thoughts and ideas there. The one thing I think that everybody has to be aware, have awareness of, is that central banks are not idly standing by, and they are actively doing things, quote unquote things. Now, whether you agree or you disagree that they are doing the right action, they are acting, right? Whether it's the Ministry of Finance and the Bank of Japan, whether it is the Bank of England. My question is, what's going to happen, when the market turns its attention from, okay, so first, you had Japan, then you had, what happened with the UK, and you had the gilt market. What happens with the market I say the market, everybody is in the market. What happens when we go after boons and the German boons get destroyed? And yields start to rip there. I mean, you can see boons and kind of the path that we're following here. It's ugly. And then we haven't even started really talking about the bond market. I think the U.S. Treasury market. A lot of people believe that hey, Treasuries can't go much further. But if you look at a monthly chart.
I thought that last week, Blake, and got stopped out, and I'm glad I did.
Yeah, I mean, look, this is a chart that I threw in the ForexAnalytix chat room. And by the way, let me stop here before we continue this conversation. If you guys want to see the most active trading community out there in the markets, it's going to be the ForexAnalytix community, the macro chat room, which we call it the Flownomics room, the general room, the trades room. I just was telling people I just closed out of a few positions here. Somebody asked me if I'm still long the Aussie. I'm not long the Aussie anymore. I put on a long-term position in the Aussie about 100 pips ago, and I started getting into a position, and I took it off yesterday after the bond market move. But I'm not opposed to putting it back on. But anyway, if you want to join one of the most active communities, check out ForexAnalytix. And the reason why I mentioned that is we are actually raising our prices we're normally at 119 per month. Okay, we're raising them to 189 per month. For the first time in 4 years, we are actually raising our prices, and they're going to stay elevated after the end of this month. We have actually dropped the prices this week to $99 to say, hey, if you want to lock in your prices now and keep them locked in, we grandfather people. We have people that are paying prices that are lower than this from 6 years ago. So if you want to lock in your price of ForexAnalytix now, this is the time to do it, because you'll never see those prices again. I'm going to tell you right now. And people know when I say things like that, I mean it. So check out ForexAnalytix. Make sure you get involved. All right, going back to the bond market here. I was talking about it in our chat room, look at this 30-year, look at the 30-year treasuries. We are below a 618 retracement. And by the way, technical analysis, in my opinion, matters a lot less in markets like right now. So your charts that you look at, they are not so relevant, right? Because the market doesn't care about your fib levels. They don't care about your relative strength or your oscillators. It's all very emotional right now. So you look at the bond market, and I got to ask you guys, do you think this thing is at support here? Do you think it could go lower? There's a monthly chart of, bond market. What do you think, Dale? I mean, you thought that last week. I mean, look at us now, right?
I really can't buy them.
What's that?
I can't buy them.
Yeah, I mean, okay, so we haven't heard from Stelios yet.
I can't short them.
I'm busy. I'm busy arguing with people.
You're busy arguing with people.
Okay. People who just don't listen, but don't actually listen. That's what I don't like. But anyway,
and if they listen, Stel, you've been an interest rate bear for ever now.
Yeah. Well, what have I been saying for weeks and weeks and weeks? The macro environment has not changed.
Oh my God, gold is ripping, by the way.
Yay.
I have to say, though, however, today's Bank of England move is starting to make me think. I've said before, I think the central banks are going to turn a lot earlier than people think. We're far from that point. But the Bank of England, I think, is first little step. They're acknowledging there could be a problem. Obviously, there could be a liquidity problem with the bonds selling off so fast. So I'm just saying we need to keep an eye on them. For me, the macro environment has not changed yet. Yields higher, risk lower. Everything pretty much lower. But I think we're closer to a turn than people think, and that's my opinion.
Yeah, and we like a turn for what though? Explain that.
Oh,
I mean,
yeah.
Central banks.
A turn in terms of their attitude towards monetary policy. I think they're going to do a pivot of some sort, maybe slowly or fast. I don't know how it's going to happen, but I think it's going to happen sooner rather than later.
so let's take a step back really quick and let's realize where we're at for the S&Ps. Let's just take a real quick look around and I'm gonna go back.
You have a line down there too, Blake. What is that blue line?
This one right here.
Yeah.
Well, if you watch the week ahead video,
I'm sorry, Blake. I missed last.
No, Dale, I'm gonna specifically point my finger at you now. No, I'm just kidding. But if you watch the week ahead video, that blue line is actually a breakout point. That's where like the confirmed breakout point in the S&P back here, because you can see post-COVID lockdown. Right. We rallied, then it looked like a failed breakout. We rallied again, and we're like, shoot, this is just a consolidation. And the market was kind of on edge whether we're going to break out or not. And then that really confirmed the breakout above that resistance. And then it was off to the races from there. And I said on the week ahead video, you got to look left. And that level comes in around 3,800 in the S&P, 3,800, 3,900, or I'm sorry,
36.
3580 or 3590. I'm sorry. And it depends, how you want to draw
how thick the line is.
Yeah. And I'm like, well, what if you're not looking left and you're just looking at 3640, then we might get a dip like that and then a rally. So go back and watch the week ahead video. I talked exactly about that drop below those lows and reversal. Now, I'm not sitting here long the S&P right now, but that price action is a little scary based on what central banks are doing right now. And like I said just a moment ago, you got to take a step back and go, central banks are active here. It's not like they're sitting on their asses. They're very aware of what's happening. There was a Treasury said something like last night about, currency movements. They're even mentioning what's happening in the markets, and their eyes are on it. So
Yellen's got to say the dollar's too strong. At least try the jawbone.
Yeah, I mean, there might be some, coordinated effort. There might be some more efforts. What's that?
She didn't do so last night. She was out with the comments last night saying that markets are functioning normally and well.
Wow.
Right, but then there was another comment. Let me see if I can go.
How can she say that?
Exactly. And White House's economic advisor Deese, I think it is,
she's retiring. She's going on the.
He doesn't anticipate the need for any sort of accord on currencies.
Wow.
Big fat nothing from the US.
Wait, hold on. Well, you're doing
like
that.
You're on your own, everyone.
Find. Just give me a second. To go back and
like they all want to wreck the economy. The Fed, the Treasury.
The White House, White House advisor Deese said there's no need for global accord to modify currency values. Okay, that came out.
He must have heard me the last few days.
But
make me look dumb.
People are watching, right?
Yeah, they are.
They're watching, and that's a fact. All right, so real quick, I know we only just have a couple of minutes. There was a question that just came in a little bit ago, and I just want to make sure I clarify. Mandy said, but your prop traders get your room as a bonus add-on, correct? That is correct. If you're in the trader funding program, you get ForexAnalytix for a certain period of time, depending on what account you're trying to access. So, obviously, if you're doing a 25,000 or you're just trying to access 25 grand of ours to trade, you're going to have less time allotted to you than somebody who's taking on trying to access $1 million. So based on how much your account size you're going for, you will get ForexAnalytix for free. And that's with the chat room, because we don't want to leave you out there hanging and not have any ideas and no support. You want to be around other traders and listening to our private shows like the Morning Edge and Daily Roundup that come up in about an hour from now. So you are correct, Mandy. Just wanted to clarify that. All right. So let's go around the horn really quick. Steve, what do you think is going to happen today? Like, do you think we should be really paying attention to what central bankers are doing, or are you just going to brush them off and saying, what can they do? And you're selling risk here. What do you think? Is he still here?
He may not be here.
He may not be.
Well, he is here, but he may be on meetings. I'll tell you what I'm looking at.
Yeah.
Why
Okay.
don't you
Please
tell us what Steve would say.
Steve would say, "Well, sooner rather than later." No, I'm kidding. I still think. I still think we're in sell the rally mode in risk.
Okay. So sell the rally mode, but where would you be a seller of risk? I mean,
3,900.
I mean, knowing the fact that we broke below like 36.40 today and we couldn't really hold it, and there's BOEs acting right now. So what are you doing?
I think the first level in the S&Ps is that line you have at 37.20 or whatever that is. Yeah. That's the first level, but really 3,900 is the big level. Yeah, so you know me, I'm not. I don't day trade, so I will probably wait for 3,900.
Okay. All right. So let's look, Ryan, what do you think is going to happen today? What are you going to be focusing on?
I've only got a couple of positions, euro dollar short and gold short. Gold's making the 1640 level a bit of a little brother of the 1670-80 big break that we had. So that's what I'm watching here. The pound, we talked about it yesterday. We've had a low of 105.39. That's only a few pips above that 1985 low. We spoke about it. Dale spoke about it yesterday. It may have got smashed in the crash, but old levels have a habit of showing up again. And that 1985 low is there or thereabouts. That seems to be the level right now.
All right. K-Man, your eyes on anything?
Yeah, but I've got my eyes on the clock because we are end of month and we are trading value date end of month today. So there might be a bit of activity on the dollar side, which we regularly see from the US corporates. And for the rest, 4% is important on the 10 years, not only technical but psychological as well, I think. So I'm going to see what happens to the dollar, but especially towards the end of the week, I start to think that there may be a bit of a counter trade, at least technical or tactical, in the making for the start of October. But I'm watching the clock right now.
Are you out of silver longs, Kay?
Oh yeah, my long-term ones they don't risk anything, but yeah, my long-term ones. But I've not any add-ons. I'm patient.
Okay.
Hey, and Dale, how about you?
Well, I'm trying the long side of euro here.
And you are.
Yeah. So
hey, well, you got a lot of support down here, so I think
some divergence.
It's risk reward, right?
Yeah. Canada too. Canada, Ryan and I were talking about it early in the show. Canada showing trading right with yield. So if we have a pullback in yields, we should get a pullback in Canada. The inter-days look almost identical, 4 hours, and 10-year in Canada. Right, Kay?
Yes, sir. Because the Canadian yields have not followed to the same degree the other yields on the way up. So if the other yields come down, Canada may benefit. And as a matter of fact, oils are trying to base as well.
Yeah, so you have a nice correlation to trade with that. I didn't, I looked at yen and yields, but you have your tighter correlation right now is with CAD. And I learned that from being, a member of the community here on F.A.C.E through these guys. So, surround yourself with traders better than you and you rise to their level. I learn every day from these guys.
Well, thanks. Thanks, and Dale. And I know you have your interview coming up. So I want to say, guys, keep an eye on the dollar mex ahead of Banksco tomorrow. So, Dale, thank you for being here. Team, thanks for all of your inputs today, and I appreciate you all being here. We'll catch you tomorrow as we.
I'm a fan of the F.A.C.E. I enjoy the show. Don't you? Anyway,
I enjoy hanging out with you guys.
Yeah, I mean it's fun, and it's really kind of gets the blood flowing being in here for me anyway. So, okay, let's move on for, Arnaud Tertier is with us at Intel Invest. Arnaud, it's been, what, about 3-4 months? Great to have you back.
Thank you, Dale. Great.
How are you, my Trading Warrior brother? How are things going with you?
Pretty good. Pretty good.
Okay. We're going to take a look at a few things that you're thinking about on your radar, and you share your screen.
Yes, I will share my screen. Give me 1 second. There we go. Can you see it?
Got it. Okay. So S&P,
awesome.
If you could raise it just a little bit, there we go. It's more
right.
in the,
it's
go.
On a large, that's me.
Okay.
Make it a little bit smaller.
Just to review, when did the bull case for rally to new highs become negated for you based upon your Elliott work?
Well, that was not too long after our interview. I can show you actually that I posted a couple of days later on some websites.
You don't have to show me. Look, it's an evolving thing.
Yes.
And W.D. Gann said, if you don't learn how to change your mind, you won't have any change left. But I was the same way. I was leaning the same way. I thought there was a possibility, but now to me, I think best case is a bear market rally, but you have a pretty good rally setting up here.
Yeah, this is a alternative count. The screen started here. My preferred count, I'm going to switch here to the NASDAQ 100. It's a little busy chart, but you're looking here at my preferred path is green with the 3, the 4, and the 5, and then another 4, and then another 5 to complete a larger, I believe, A wave to the downside. The alternative, so right, this is edit wave. You always have your preferred version, and there's always an alternative version. If you are an objective, honest edit wave or editician, you present the two options to your readers, to your followers, to your clients, and then you let the market decide which one it will take, with, of course, always a preferred option based on other analysis or what you see. So preferred option is the green path, and then the red path is an alternative option where we're going to bottom reasonably soon at around the June lows. We can overshoot them a little bit, and then we kind of go back again to the August highs before we get another big leg lower. This would be a quite complex correction of the initial move we had down from the all-time high, which was made for the NASDAQ in November into June. And then what we call this would then be a flat correction, a irregular flat. So you get 3 waves up, 3 waves down, red A, red B, red C, or that would then be the red.
So let me ask you, as an Elliotician, and I know you look at other markets and relationships.
Yes.
And even though this is your preferred count, if the dollar turns and yields are peaking in here, will that make your alternate count more likely with the dollar selling off and yields coming off? Okay.
Yes, of course. Yes.
And
so
do you have a view on whether we're into some type of blow off stage in the dollar and yields, that is a possibility from here, or I'm off my rocker?
No.
I mean, am I the boy who cried wolf here?
Well, no, you're
wolf.
It's like plan B said. It's better to be roughly right than accurately wrong. So that of course all plays, right? There's so many facets to the market. All of those go into price and what price is going to do. So I don't always look at all those variables because prices bake them in already. They're of course a million more variables than just those two, but those of course very big players. I kind of look at them from a sideline. I follow other people that know a lot more about it, just like the previous speakers on the currencies than I do. I have only so much bandwidth. Just tracking the 5 major indexes in the United States is already hard enough. Add then a couple of stocks like Tesla, Apple. I'm also tracking, of course, the cryptocurrencies, Ethereum, Bitcoin. And, before you know it, the day's over. And I haven't even looked at what Powell or Yellen said, right?
Yeah.
Which also,
well, I mean, what's happening in FX is disorderly and historic. I mean, there are levels that we haven't seen for 20 years and historic low for cable. I know that being an S&P trader, people are, is it hard for you to trade your preferred count with so many people on the same side of your opinion?
No, not really. No,
Okay.
It's maybe something we can touch on. I prepared a little bit of a presentation about retail trading.
Oh, cool. All right, I'm going to stop interrupting.
Attitude, so to say, and we can maybe go over it instead of kind of always go over what the market is going to do, time permitted. But I know a lot of course, listeners and viewers want to see where we think things are going. But for me, the preferred path is lower. I think the futures are a little bit lower again. And now I think we're going to get to this crossroads. Are we going to decide to go to about 9,500 on the NASDAQ 100, or are we going to stall somewhere around the June lows, maybe a little bit overshoot? Let's say we stall at around 10,000 and then we shoot back up. And then people can say, hey, I can trade this because you say it's either going to go up or down. Yes, that is the market. The market is probabilistic in nature. But if you're, for example, short, you're going to use those levels where we say, if it goes above a certain level, then we know it's not going to go lower. You can use it as a stop or a stop loss, right?
Right.
But that's the beauty of the other way. Manage your position. The only thing you can do is manage your position. I cannot manage the market. If it were up to me, I will let the market rally because I like bull markets better than bear markets. But
you ever tried the cursor technique?
What is that deal?
Well, you put your mouse, you put the cursor on your chart, and then just drag it in the direction you want the market to go.
I'd love to give it a try.
After the clip, do it only on your demo account. But anyway.
Okay, sure will do.
All right. So seriously, the S&Ps. Okay, so maybe we get.
So for the S&P 500, also here I'm starting to look here at what I call a super cycle 3 top, which is a top of the same degree as we saw in the late 1920s.
Wow.
And this means we're in a super cycle 4 wave, which is very complex and overlapping and annoying. Going forward, it's going to be a lot of sideways in the bigger picture. I'll show you that in a minute. Here I have a slight alternative version to what I presented to the NASDAQ. Here I just look at an A wave, and here we have a B wave, and now a C wave. I can interpret, right? The Elliott wave is an interpretation of the price action till the interpretation is proven wrong or right. So you can always interpret it in several ways. And that's why they always say if you have 10 analyticians in one room with one chart, you will get 10 different opinions. And that is fine. One of them eventually will prevail as long as you're aware of them.
So your line in the sand is what, about 3,900, 3,920?
I would say here about 38.20. If we start rallying, if we start rallying above it, then I'm going to look here for this larger bounce where we started our presentation with for interview.
That's a very important area.
Yeah. Why is that?
Thank you for sharing that.
Oh, you're welcome. Because then this impulse to the downside cannot happen anymore. In an impulse, as you may know, right, the fourth wave cannot overlap with the first wave, and the third wave needs to be the longest. Those are the 2 primary rules of Elliott wave, plus the fact that the second wave here in this Roman numeral 2 or this green 2 can never go beyond the start of the first wave. So we have wave 1, wave 2, and then 1 of 3, and 2 of 3. And the market now needs to prove if we're going to get this path. So this option is on the table. So what you do is you analyze the markets, and you study, of course, Elliott wave, and you apply that study to the market, and you're going to track it. Is this going to fill itself in? This potential is in the chart. But this potential will be off the chart if we're going to reverse hard. So yes, can the market go back up? Of course it can. Can it go sideways? Yes, it can. But it's up to me to say what is the most likely path. And it's still lower. There's just many ways to look at it. It's lower. But, maybe Powell will open his mouth and say, we're going to do more, whatever we're going to do, or less of whatever we're doing, then the market will reverse. And then we have a nice other option on the table. But we're going to sit and wait for now. I know the preferred path is lower with some bounces along the way till the market proves me wrong. And it's beautiful because you have absolute clear if-then scenarios. And for trading, that's all you need to know. If, then I do this. And
why you're in, where you're wrong, and what you're looking for when you're right.
Yeah, absolutely. Absolutely. So, back in June, I think it was early June, we had our presentation and the market kept dropping. I think back then,
you're looking for a buy back there.
Yeah, I was looking for a buy around 37.50. I remember I was looking at the webcast yesterday that I held, but I said 37.50. Well, we got to about 36.40, right? So it's not a bad shot. And if you're then a retail investor, you'll tell me that I'm wrong. I don't know. I don't understand why that would be. But then I was looking already. Let's see here on a bullish wedge that was forming. I published this on investing.com. If you want to laugh, you should always read the comments from the trolls. It's absolutely hilarious. It's really silly. You got it too. But I was looking already here. This was published, let's see here, June 28th. So June 28th, I said, we have this potential wedge forming. If we break out, we're going to target, let me zoom in, to about 43.65, 45.30. At the same year for the NASDAQ 100. So the other wave count would kind of complete here in June. And I said, we can target as high as 15,000 plus. That's the potential that's in the chart, because this is a bullish wedge. I mean, it was staring you absolutely in the face. And now what did we get? On the NASDAQ 100, we stalled at about 13,800. It didn't reach its full potential. It happens, right? But once this potential pattern completes, we will get a rally. And we got a breakout, a retest, fantastic rally. Same here for the S&P 500. Let me see here. So, we rallied to about 43.50 almost, right? That was
when
the
200-day moving average came in there. It looked almost too easy up there to me.
Yes, it did.
How about you?
It did. I don't have them on the charts.
So I was looking for just a pullback and a higher low at that time. At that time up there.
Yes. Yeah.
And that didn't happen.
No, it didn't happen. We got a retest of the 200-day moving average, and that is quite bearish. And I've been tracking a lot of bullish breadth signals. I don't have them here on the charts, but pretty much none of them worked. Those that normally work in a bull market where you see a breadth thrust, extreme oversold conditions, all those things, all we got was pretty much a counter trend rally, and we continue to pretty much rally in counter trend patterns, which means 3 waves up, and we continue to move in impulse patterns lower, which is a motive. So the motive of the market currently is down. So after our interview, I kind of reassessed the charts, and this is what I'm an author on the FX Empire. And I was looking here at the big picture for the Dow Jones, and let's see if I can open this chart. And decided that we might actually be in this large super cycle 4 wave. So if we go back to Dow Jones all the way to the 1920s, we have the super cycle 1 top, and then we had a zigzag cycle, super cycle 2. We had a zigzag cycle 2 in the 1942 low. Believe it or not, right, the market rallied most of the Second World War, interesting enough. And then we had a zigzag primary 2, and then all the other 4th waves were pretty much irregular expanded flats, meaning the B wave will make an all-time high, and the 4th wave will go below the end of the A wave. So you see it here. This whole 1960s, 1970s parade pretty much was a sideways move. This was almost a decade and a half of going nowhere for the markets, right? It is down, up, down, up, down. I mean, and that's most likely what we're looking at. So if I extrapolate all these 4th waves that we had, and we're in the super cycle 4th wave, I was looking here for an A, a B, a C, and then this type of path. I'm sorry, I can't expand the chart any bigger. And that is so far filling in quite nicely. So I published this in June, and so far it's filling in quite nicely. So then I'm looking here for this blue A wave. As you can see here, then we get a larger bounce, which I pretty much have also here, right? And then it should be down again. But the thing is, with a regular, what we call flat, the B wave, as we saw here in 2009, as we saw here in 1970s, as we saw here actually in 2015, which was also a fourth wave, will make a new all-time high. And that way we can still reach the 5,500 in the S&P 500. It is a number that I think the market still has a, what do you say?
From here or after your preferred count plays out?
Way further down the line. That's
Okay.
probably going to be many years down the line. The super cycle 4 wave can last many years. It goes maybe into the 30s.
Couple
90s.
of generations.
2030s. Sorry, I'm 100 years behind.
20 years.
That could last 20 years. If you look here at this primary 4 wave, this lasted about 10 years. Yeah. The super cycle 4 wave also lasted 10 years, or cycle 4, sorry, from 2000 to 2009. So 10 years, yeah, that's fine. So that might be a ways ago. Yeah.
Yeah. Okay.
Now I'm not a market timer, but if we just use logical analysis. So I kind of gave up on the fact that we're in a bull market. Also, like the internals, right? Now, if you see how, for example, large stocks like Netflix, Facebook, and other stocks are completely being decimated, PayPal, and I don't know which other large companies are completely being decimated, never seen since the 2009 low, it tells me something else is going on. Inflation, the Federal Reserve.
How about a
dollar,
bond market crash?
Bond market crashing.
Everyone's talking about this bear market in stocks, but the bear market in bonds puts it to shame.
Yeah, puts it to shame. So these things we've not seen since 2009. So it does start to tell us something else is going on. And this might explain it. And the ultimate low for this super cycle 4 wave can be anywhere between 1,500 or 1,000 on the S&P 500, but I don't want to go that far out.
1,500 and what?
And 1,000, somewhere around there.
Okay, all right.
But I don't want to go that far yet. It really, of course, requires a lot more data. But so far, as you can see, we have this black A, black B, which this was published in June. I was looking for. So that's filled in quite nicely. I published it here, and then the B wave. So now we should be in this C wave. So far, it's following along quite nicely. I think the futures are a little bit down again, and we should kind of machinate our way lower. Now, again, these are what we call ideal Fibonacci-based target zones, right? As you know, Fibonacci is, of course, important on where 3rd, 4th, and 5th waves should ideally, textbook-wise, bottom. The market reserves the right to do it a little bit different. It doesn't have to. And this is sometimes where people get hung up on, you're wrong. Well, as long as the 3rd wave is not the shortest, and as long as the 4th wave doesn't overlap with the 1st wave, the market can pretty much do whatever it wants. So, with that, I kind of made this little presentation here on retail trader issues. I see a lot of issues. I honestly get once a week pretty much an email from somebody who is underwater multi $10,000 on bad trades. They followed some bear, they followed bull, or problem is they bought too high, still not selling, and then I kind of have to clean up the mess. Gladly so. But then I realize most of these bad trades are because of these unrealistic expectations that a lot of people have. Because all I can do here is where we just forecast it on what I'm seeing in the charts. But if it's not right between your ears, if you have these unrealistic expectations, it doesn't matter what I say or how good my work is. I can be right 10 out of 10 times. But if you have these unrealistic expectations, your trading will not be going well, and you'll start blaming other people for your losses, right?
So then if you do that, you'll never grow.
Exactly.
And the point is to grow from adversity, not to own it and be responsible.
Yes,
for your own decisions, and not say I got burned by this market, I'll never trade it again. It wasn't the market, it was you.
It was, of course,
Yeah. Okay.
are all these
Yeah.
Wall Street firms, are they going to close all their doors because they had a couple of bad trades? Of course not. That's not how it works. And so, this is about unrealistic expectations. This is not to bash retail traders or any trader for that matter. It's just to kind of
I'm sure there are hedge fund guys, big money guys that have unrealistic expectations.
Of course, there's human as we are.
Like Scaramucci with his Bitcoin positions that he had to shut his firm down, but now he's reopening one. So the difference between guys like that and us is they can make more than one mistake.
Yes.
Right?
Yeah.
Okay.
Yeah,
it's a one mistake business for a lot of people. Don't make it.
No, and it's nice to make mistakes with other people's money. That doesn't hurt as much either. But when it's your own money, if you let go of these unrealistic expectations and become professional and emotionally detached, it will go a lot better. So I made this long list when I started with, and it's already down to 16 type of unrealistic expectations, or like Kathy Wood from ARK Fund, right? Also you can see how her thinking has affected the fund. The first thing is that a lot of people think that they instantly make money in the markets. That's of course ridiculous. It takes many years to become a proficient trader. Follow Mark Minervini on Twitter, and he will say it every single day pretty much, that it took him 10 years before it became profitable. That's how long it takes.
Yeah.
And
I get an average answer of 4
years. Yeah, that seems that seems quite quick, but that's with the stamina, discipline. It will get you there, I'm sure. And then, people think there are always these market gurus who know everything, every move all the time. Well, nobody does, right? I certainly don't. And that also leads to unrealistic expectations. It's a long list here that viewers can look at. And of course, no patience, that switching between strategies all the time, that after a couple of losing trades, giving up, like, oh, it doesn't work. Well, stick with it. You have no plan, you're opinionated. And last but not least, people treat it like a hobby. Right? If you think you're going to make money instantly in the market, if you treat it like a hobby, I'm just doing it on the side, you're going to get paid like a hobby. Hobbies cost money, right? You treat it as a business make money. So you have to be treating it as a business. Like I said, the Wall Street firms don't give up after a few losing trades. And of course, the big pet peeve is no stop losses, right? Especially in the bear market, got to have stop losses. And
well, thanks for reminding me of everything I've done and everything I've seen. Okay,
guilty as charged too. Right. Yes.
And so I think that you're a good teacher. Or not.
Oh, thank you. It's difficult. Trading is one of the most difficult.
It takes patience to teach.
It does. Yes.
More than to trade, actually. For me, it takes more patience.
Also,
Van Morrison song.
Yes, it is.
About him having to say something again and again and again.
Repeat.
What's the best way for people to keep up with, your counts and as things evolve?
Yeah, so there are many ways to go about. You can do it the easy and cheap way, if you so say. You can follow me on FX Empire. You can type in my name, and you'll find me probably author on FX Empire. Or on investing.com. Again, if you want to read the silly comments by trolls, please go ahead. I mean, it's absolutely hilarious. Sorry, part of my French. Stupid.
And your website?
And you can go to my website. You can sign up there. So there are many services I provide. There's one where I do what I call the major markets trading. I give daily updates, 2 live webcasts per week, 3 written email updates per week, just quick, brief to the point on, price levels to watch. And you can sign up for those. And then you pretty much have to follow how I analyze the markets and use that for your own trade. Now, if you're new or want to do it a little easier, I have this major market trading alerts. You'll get an email every day, about 10-15 minutes before the markets close. These are based on my algorithms, and they will tell you buy, sell, or hold any ETF that trades the major markets, the SPY, the QQQs, whatever market, right? The semiconductors.
Okay, Arno. Well, I'm a fan and rooting for you and your team and everyone you work for. So
thank you.
Hope you have a great fall trading season.
Yeah, it should go well. This trading alert service has been going great because we trade, of course, both the long and the short version of the market, so to say. So we're doing really well, and it's very easy trading. Even if you're new, especially if you're new to trading, this might be a good way to learn the discipline of trading, when to buy and when to sell, when to sit on your hands. For example, we've been sitting on our hands sometimes quite a lot, waiting for a good setup. And if you wait for the good setup, just like we talked about, then you get a good trade. And there will be losing trades along the way. No system is perfect. I'm not perfect, but that's okay, and that's sometimes the fun as well.
Great surfers don't try and catch every wave.
No, know when not to go, right?
Sometimes they're just sitting on their board paddling around.
Yes. Oh yeah.
Waiting for the setup. So not that I was ever a great surfer. I used to pearl a lot though.
No.
Well, thank you, Arnaud. Great to catch up with you.
You're welcome. Thank you for having me, Dale. It was a wonderful 30 minutes to be able to share some of my work.
It flew, and appreciate your giving nature of sharing it with us today, buddy.
You're welcome.
So Arnaud Tertier, everyone, and follow him. Arnaud's a very good elitician, tactician, as you can tell. He knows psychology that hurts people. So So
including myself.
He read my journal publicly during this interview. So my trading journal, let's say I did this, I averaged out, I tried to break even, I pulled my stop because it was too close, all those things. So good hunting.
Thank you.
Arnaud.
Thank you.
You're very welcome. And everyone, thanks for your attention. You can join the team in 15 minutes on the Morning Edge. And remember, whatever you're trading, how much you're trading, don't just count your pips, count your blessings. Adios.